Our stock of the day is in fact Macquarie. Now technically it's an operational update that they have provided. It says profit rose across its 4 business divisions over the December quarter. It says the net profit at its commodities and global markets unit was substantially up on the prior corresponding period. Macquarie Asset Management's net profit rising substantially. That's after the gain from the divestment of North American and European public investments businesses. Assets under management up 3% from the September quarter to $736 billion. And it says it's cautious on the outlook as it responds to the current environment. It says year-to-date earnings for 26 are broadly in line with the same period a year ago. Phil, what are you seeing for Macquarie, or what is ahead for Macquarie?
It's an interesting one because, I mean, despite the cautious outlook, some of the commentary was quite positive. The prior corresponding period was a little pedestrian-like, but they used the words a number of times, substantially up, and Macquarie doesn't throw those words around quite loosely. In terms of what moves the needle, the commodities group, the market-facing businesses like Macquarie Asset Management, Macquarie Capital, they've got some good momentum. The commodities business does well in volatility. We've seen volatility with commodity prices grinding upwards. That should serve them well in that business. Funds under management, rising tide. Your biggest client is the market. That's moving in the right direction. You potentially get some more performance fees, and we've seen the capital markets are absolutely well and truly open, really for the last 8 or 9 months. There's a lot going on there. So this is the environment where an investment bank like Macquarie should actually thrive. It has been a volatile share price, down as low as $160 in the last 12 months, as high as $240. We're closing in on 225 or so, 215 today. My guess is you'll see perhaps some slight upgrades in consensus overnight. We'll wait for the full year result in March, but if they finish the year strong, get some performance fees, this stock can get some real momentum. And if we are at the start of a 2 or 3 year bull market for capital markets, transactions and commodities, this is the time to own this stock. So it's not as cheap as it was, say, even 3 months ago. But I would be comfortably holding this stock at the moment. In fact, I'll call it a buy because I think conditions for it are actually improving, and we got some. I mean, again, material increase on PCP across 3 of their businesses. Yeah. I think they can only improve from here. So I would be a buyer of Macquarie.
You just talked yourself into it, didn't you?
I did.
We sort of did, and he hasn't even heard my response yet.
Oh, here we go.
Which is
we look at the start we're making, double buy. You can send it to the commission.
Why?
I think, for starters, Macquarie is one of those large cap stocks that has had 2 or 3 years of pretty much stagnant profits. I mean, they constantly had to actually issued a profit warning a couple of times, mild ones, but nevertheless. They have the internal culture. The fact that you have had some disappointment. Pressure on the margins because the revenues, there's nothing wrong with them, but the tide was just not in their favor. But you will see them internally working on better times, and then there's things that really help them. I mean, capital markets, which I've been making that point here as well a number of times. Whenever there's lots of IPOs and capital raisings and stuff, people always think Computershare. You should think Macquarie. Right? That's the number 1 beneficiary of that. So. And also the first thing that comes to my mind when there's a resurgence in commodity markets is Macquarie is trading, in particular energy. They love that stuff. Right? Unfortunately, it's not just a one-way story. They also had to admit today that they will have a higher tax rate, and I picked up, for example, that was also the reason why REA Group disappointed slightly. Higher tax rate does make a difference. Macquarie is now another one, so maybe there's a trend here that maybe the tax rate might eat into some of the upside. Otherwise, I think the share price would be up a lot more, and I think on the basis of that, I think the upgrades from analysts will be quite modest. I think, but nevertheless, I'd be on board. I am on board, but I'd be on board anyway because if the bull market continues, it's particularly for certain segments of the market, you have to have Macquarie in the portfolio. Share price should be higher in 12 months' time and beyond.
And that is why it is a double buy for our stock of the day, Macquarie Group.